So second thing you mentioned in that episode a year or so back was focusing in on gross margins. And so a year ago, they clocked in just under 38%. Now they're around 39.4%. So it's actually a nice little uptick. But if you look quarter to quarter, the story is a little bit different. They've actually trended down. A while back, you said these days of these high 40% gross margins, which I think is something they realized as recently as like 2012 or so. Those days are over, and I totally agree with you. That's just not sustainable for what they're doing right now. But is there anything you're seeing on the gross margin side or the average selling price side?
So on the ASP side, again, going back to the most recent release, it's not reflected in the quarter. So as I mentioned on the call, and as many people are predicting, over the next few quarters, you're probably going to see some pressure, some downward trends on the ASP because as you look at it, the 6 SE, it is going to be a cheaper model, and it's not necessarily made for U.S. markets. I'm sure people will buy it here, but really the play is, okay, how do we get this thing to expand in India, China, all the other developing economies where there may not be, or essentially they want the luxury of an iPhone, the high-end model, but may not be willing to pay up for it.
And something we saw with this most recent report was ASPs were down year over year and sequentially. And in the guidance...
Tough comps again?
Yeah, tough comps again. And that's probably going to continue to trend down. Like, as you mentioned, the product mix profiles change dramatically with the SE, and the currency headwinds in the foreign markets are going to persist. I mean, that's not going anywhere either.
Yeah, but you also, currency headwinds, just look at the constant currency revenue basis. That's a true guide of what a business is doing. If you're a short-term trader, okay, sure, you can look at that and maybe put it into your model and see what it spits out and make your decision. But if you're longer term, you just have to look at what the actual business is doing, not what currencies are doing, which is out of their control.
Yeah. And looking forward from the conference call, management guided for gross margins to come in somewhere between 37.5 and 38% for this upcoming quarter. Again, this will be down sequentially. I think that that's very realistic, and I think that's where you're going to continue to see things. Last quarter, we talked about on the show, they actually had an above 40% gross margin, and that was a slightly inflated number because they had about $500 million coming in via a patent dispute with Samsung, and that added to the top line, and that was not a true measure of the product operations. That was just a one-off that was coming in. So
one-time, non-recurring.
Yeah, exactly. So don't get too used to the idea of those 40% margins. I think that we're going to be seeing them in the mid to high 30s.
But at the same time, and we'll talk about this a little bit, the high-margin businesses that they do have that, as we look at it, are pretty much, as I say it, en fuego.
Fuego.
Yeah, they're not super meaningful to the company, well, to Apple, but any other company, any of those companies as a single one company would be a huge success, but not in Apple standards.